Get to Rebecca Patterson now. She's Chief Investment Officer at Bessemer Trust to discuss how investors should position themselves during this market uncertainty. Rebecca, it's nice to see you. There's the question. What do you do?
Well, if you're already invested, I don't think we're necessarily done with this sell-off. I mean, it was a big day in terms of points, but we've seen now last October, last December, a couple times the change in market structure with more algorithmic, more systematic trading means that these sell-offs can be very fast and very violent. So I don't by any means think we're necessarily out of the woods. So it could continue for a while. I certainly wouldn't advocate buying a dip today. At the same time, I think you do need to take a step back. We have seen sell-offs like this before over the last few years. And we have to remember that the global macro environment is a mixed bag. It's not all bad. You've got a strong labor market globally. You have generally strong consumers. You have central banks cutting rates. We're probably going to get a couple more rate cuts this week around the world. So it's a mixed picture in terms of the economy. But I think right now what's driving us is not the economic fundamentals. It's the uncertainty around policy that could affect the economy going forward. We actually took risk off the table in mid-July on behalf of our clients.
I mean, I'm so glad we have you today, Rebecca, because I remember when you just talked currencies and you and I talked currencies. So you can explain...
The old money in motion days? Is that what you're referring to?
Actually, life before CNBC, believe it or not, days. Rebecca, how big of a deal is this, what the Chinese did overnight, and why does it have such strong ripple effects across markets from oil to emerging markets to the S&P 500?
Well, I appreciate you bringing that up, Sarah, and I think you can answer this question yourself as well as I can. But I think the move today is symbolic. I mean, the actual move in dollar renminbi is less than 2%. But it's the fact that that 7.0 psychological level was broken on the renminbi exchange rate. And you have to remember that as the Chinese economy and the Chinese markets have gotten more interconnected with the rest of the world, before it was what happened in the U.S. drove China. Now that relationship goes both ways. If you have something in China, it can affect the rest of the world also. So if the Chinese renminbi is weakening, then other Asian countries, other countries vying for that trade, for those exports, are going to be inclined to weaken their currencies as well. So this isn't just about the renminbi. This is potentially, doesn't mean it will happen, but it's potentially the beginning of a broader reduction in exchange rates to all the countries that are competing for that trade, so mainly in Asia, and that pushes up the dollar. And if the dollar goes up, then people worry about how that affects profitability of U.S. multinationals, which then affects our broader stock market. So you have to think about all those linkages, not just the renminbi in isolation.